We're taking you above the clouds in Central Otago's gold belt, where an Australian mining company says it's made one of the most significant gold discoveries in New Zealand in 4 decades. It thinks this place could profit up to $2 billion over 10 years.
You could probably say the gold rush has started. That indicates 10 years at 110,000 ounces per year for a total export earnings of 4.4 billion New Zealand dollars.
This is Santana Minerals' Bendigo Ophir Gold Project on privately held land just outside of Cromwell, an hour's drive from the tourist hotspot Queenstown. This whole area was home to New Zealand's first gold rush in the 1800s. Now it's making a comeback. This entire site could soon become an enormous open pit and underground gold mine after decent discoveries were made in 4 deposits. So this is the most valuable spot right here, according to your indications.
Yep, a couple hundred metres below us.
ASX-listed Santana has a permit to prospect and explore this area and plans to apply for a full mining permit later this year.
Our scoping study indicates 110,000 ounces for 10 years, but year 2 of producing gold gets up to close to 200,000 ounces.
It's nearby to the country's largest active gold mine, Oceana Gold's Macraes mine, which has been operating since 1990. It's produced 5 million ounces of gold over its lifetime, and it plans to keep mining beyond 2028. Santana's timing couldn't be better. Growth in global gold production is flatlining, according to the World Gold Council. On a global scale, our production contribution is minuscule. We produced 6 tonnes, that's 6,000 kilograms, in the year 2022. Barely a blip next to China, Russia and Australia, producing over 300 tonnes each. But we are earning more off our exports of it. Official figures show we exported $1.1 billion worth of precious metals and jewellery in the year to May, a 26.8% increase on its value the year before. It's now worth more than our exports of iron and steel, but less than our aluminium exports. The increased value could be because the spot price of gold has been hitting record highs, above $2,000 an ounce. That is the prize Santana's CEO, Damien Spring, is set on. In this interview, he explains how it plans to capitalise on the current market. Damien, thank you so much for doing this. Good to be here.
My pleasure. Welcome.
Let's talk about the opportunity that you've discovered here. You seem to be very encouraged by the early indicative figures. Mm-hmm. Talk to me about the potential opportunity and how much you could profit off it here.
Oh look, we published our scoping study in April this year for the Rise and Shine deposit only of our Bendigo Ophir Gold Project. That indicates 10 years at 110,000 ounces per year for a total export earnings of 4.4 billion New Zealand dollars at more or less today's spot price. That is a fantastic result, and in particular on the cost side, where we can produce those ounces for under $900 an ounce once we're set up and operating. And if we add back on all the capital, it's under $1,400 Kiwi an ounce. It's outstanding economics.
The spot price of gold currently we know is near record highs. So is that quite an aggressive estimate, or have you also done a conservative one too?
Well, we do all our engineering studies on a more conservative long-term price, as you could expect. We want to make sure that we've got plenty of headroom for any fluctuation in price, and certainly when it comes to gold, there is plenty of that. So yeah, look, we did our estimates on $2,700 Kiwi an ounce, and still at that price it generated over $1 billion in net profits after tax.
So many other miners have tried mining this exact spot so many times before. Many of them have failed, or at least just left it for somebody else like your company to pick up. Why do you think that Santana can make some money out of this project now? What are the economics that are better this time around?
Well, I guess the key thing is we're talking workings that are well over 100 years old. Any modern techniques in terms of exploration have only really been since the spike of 1980, and that includes a lot of companies associated with Macraes over the years. I guess the trick has been actually to make a discovery of size, and what Santana and its New Zealand subsidiary Matakanui Gold have managed to do is take what all those previous attempts have been and identify these northerly trends, put some holes in the ground and actually literally strike gold. And that all came ahead with the James Bond hole 007 discovery hole in 2021.
Great name.
Yeah, it's natural really.
The cost to extract it, though, is obviously part of this feasibility study that you're about to do. Talk to me about the cost to mine in New Zealand, specifically these deposits being mostly open mines, and how that compares to perhaps other mines here or other mines globally.
Yeah, so the geometry is such that it is close to surface or at surface, particularly with our satellite deposits, so it is very amenable to open pit mining. But the Rise and Shine deposit is such that it continues at depth, in fact 1.7 kilometres down plunge from surface. So what that means is open pits preferred initially and then transition to underground. But what we have here in Central Otago at our project just north of Cromwell is lots of great infrastructure. You know, plentiful water, hydropower, so green energy, state highway within 10 kilometres of the project, modern international airport at Queenstown, an hour's drive away, and of course a population between the other towns of Cromwell, Alexandra and Wanaka. So there's a lot of things going here for this project that you might not get, say, in the middle of Western Australia.
Is going underground more expensive?
Look, it's a value equation. You know, to continue open pit mining at that depth would probably, the total cost to move the waste rock to expose that ore is probably greater than what would cost to mine it from underground. Also, yes, it is more expensive, so we don't also have the same opportunity as open pit to mine everything, but it is ultimately a value equation, and there is a balance there.
Talk to me about the actual value of the potential to find gold in the stores, in your deposits. It's at a pretty high density compared to some other mines, or even compared to what you initially found, right?
Yeah, so Matakanui Gold initially was working up a very low-grade deposit, about less than 1 gram. That compares with Macraes, that's been mining 1 gram ore for well over a decade or longer. So though you can make margin at those grades, but with the discovery of the Rise and Shine proper, with an average grade of 2.2 in our resources, it means we've got double the grades. Therefore, it's going to not cost us so much per ounce, a much higher margin.
Some people won't like that you're an Australian mining company with the perhaps intention to take these profits you'll gain from the site in Central Otago offshore. Talk to me about the royalty scheme and the opportunity also to give some of that money back to the local economy. Yeah,
look, we are Australian, we're ASX listed. Our entity here is Matakanui Gold, a 100% New Zealand registered company. The opportunity here for New Zealand is that 40% of our register are New Zealanders. The profits that are generated, obviously 40% would go back to those shareholders, ultimately in dividends of some form. But of course, the project itself generates about $900 million in tax, corporate tax for the government.
That's over a 10-year period.
Over a 10-year period, plus another approximately $90 million in royalties. So the royalty relatively is small, but it's in line with international jurisdictions. It's about 2% gross value. Otherwise, there's a more complicated formula, 10% of accounting profits, and I think we're probably fit in that latter category, and we've got to do the numbers in our PFS to exactly work that out. So all up, you know, of the order of approaching $1 billion going to the government, plus another $600 million going back to the New Zealand shareholders.
If 40% of your company's shareholders are based in New Zealand, you yourself are based in New Zealand, the gold discovery is based in New Zealand, surely an NZX listing at some stage, Damien?
Oh, look, we're certainly giving it serious consideration, the pros and cons of doing that, and working through that. Obviously, our primary listing is still remains ASX, and what the future holds, we'll see.
The government's in your favour. Pretty good time to ask for a mining permit, especially if this fast track bill goes ahead. I don't typically like to talk about politics, but I feel like this is part of the picture here for you. Describe that current environment and how timely and ideal that is for you.
Oh, look, it's coincidental. It's all I can say. When I joined the company that started last year, I've got a lot of experience in New Zealand getting mines consented under the Resource Management Act. And our timeline at that stage that I came up with was end of this year. We're still on track to apply for those consents. The fact that this coalition government has introduced the fast track approvals bill just gives us that opportunity. It is an overarching piece of legislation. It doesn't shortcut the requirements of the RMA and the other acts, just provides a more expedited process to reach a decision that ultimately benefits everyone involved, including the local community and mana whenua.
So say you do get that approved, you extract as much gold, ideally at the value that you perceive to, and make that size profits.
Mm-hmm.
Does that all equal a gold rush for New Zealand?
Oh, look, I think you could probably say the gold rush has started. Record high gold prices, fantastic discovery here, other discoveries around New Zealand by other companies. It's certainly got the interest of international investors and those junior exploration companies that are moving into New Zealand and pegging ground and starting their exploration. So yeah, in that sense, but ultimately you've got to produce gold. So we're well down that track. We've got the discovery. We've just got to get all our permits, etc., and ultimately financing and build the thing.
Some of your confidence I've also seen signalled in the fact that you're purchasing shares of this production company. Talk to me about that decision.
Oh, look, where I can, I like to support the stock. It has been trading up and down a bit this year. Certainly, we're looking forward to price growth over the coming 6 months as we lead into that PFS and application for resource consents. Ultimately, we have rewarded our shareholders that did exist at the start of this year in February with bonus options available at $8. We hope they convert sometime before they expire in February next year and set us up well for a final investment decision.
You say that you've seen clearly increased interest in your production company, but there also seems to be increased investor interest globally in holding gold. Gold is like Mother Nature's money supply. It used to back our currency, but we divorced the New Zealand dollar from the gold standard in 1914, ahead of World War I. The United States followed later in 1971. But with fiat currencies now losing some of their value, governments deep in debt, and interest rates priced to come down soon, investors are seemingly more bullish on gold bullion.
Oh, I think that definitely that's what you're seeing in terms of the gold price. It has leapt up off the 2,000 US an ounce mark. There are other commodities that were the darling of the mining industry at the beginning of last year that are definitely on the back burner this year. It's not my area of expertise, but I think right now, yeah, we're enjoying being a gold bug.
One of the former US presidents, Herbert Hoover, once said, quote, "We have gold because we cannot trust governments." How much of that statement do you think holds true today?
Well, certainly central bank buying, the likes of China and other major economies supports that view. They're buying gold for good reasons. Their economists have got good ideas, and that just helps drive the whole market for sure, without a doubt. Interesting that Herbert Hoover was also mine manager of a particular gold mine in Western Australia near Leonora, Sons of Gwalia, and I know that place well.
You've clearly, even from that statement, been in mining for a very long time. You have a mining degree. How would you describe this current environment, the discovery you've made here in your time in mining?
Oh, look, this will be the ultimate thus far in my career. It's not the penultimate. That means there'd be something just around the corner that will finish me off. Look, I had a successful career with my former employer, Bathurst Resources, but this opportunity was too good to give up. I live 45 minutes from the project. I've been here 20 years. I've done a lot of gold mining over my career, and this is definitely a challenge I'm up for.
We currently don't hold any gold as part of our foreign reserve assets, according to the Reserve Bank. Should we?
Oh, why not? Every little bit counts. We're producing 6 tonnes a year. What if a tonne or two of that stays in New Zealand?
Thank you so much for your time, Damien. Really appreciate it.
No, my pleasure. Thank you.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.